What's up you guys, welcome back to the channel, Andre here. These last few weeks I've seen an inflow of YouTube videos, news, Facebook posts about the real estate 2021 crash. I've also talked with a lot of people on Discord who told me that they are sitting on cash just to make sure that they can get the absolute bottom when it comes to real estate. They want to buy properties but they're sitting on cash just so if the market does crash they can get the best price on the property that they're going to buy. And in today's video, I want to go over why I'm actually buying a property before the crash. Before we start guys, make sure you drop that thumbs up to help the YouTube algorithm. It really helps the channel, so make sure you drop it and let's go. There's a reason why I love real estate, and it's because of that old quote that says you make money when you buy. This is an advantage that you don't have when you're buying stocks. If McDonald's is trading at $200, there's no way that you can get a McDonald's share for like 150 or $100 because you have to buy at the market price. You go into your broker and it says McDonald's is 200. You can't find McDonald's at 100. You have to buy at 200. However, when it comes to real estate, you can buy properties below their actual value. If a property is listed for $100,000, there's nothing really stopping you from acquiring the property for like $50,000 other than the actual seller. By negotiating with the seller, there is a possibility of you buying the property for under its actual value, and that's something that only happens on real estate. For example, my first property was listed for $41,000. Now this property was already listed below its actual fair price. It was a 2-bedroom and it was probably worth something around $55,000 to $60,000. It was completely renewed, so the kitchen was new, the living room was new, it was completely furnished, which is a big plus, especially to me because it is a rental. I don't have to refurnish the property, and yet it was listed at $41,000. I was actually able to drop this price even lower to $35,500, $37,000 after taxes. So I bought a property that was worth like $55,000 to $60,000 for almost half of its value, guys. This is something that you can't do on the stock market, and it's the main reason why I love real estate so much, is because you can get a lot of equity into a property when you buy. So when you get these types of investments, you're actually setting yourself in case the market does devalue or in case the market actually crashes. If you buy a property for 30% under its value and there's a 30% crash, well, you're safe, right? You bought the property for under its worth, therefore you're safe in case the market devalues or has a crash. You're offsetting these possibilities by having built-in credit, built-in equity as soon as you buy the property, because you're buying it for less than what it's worth. Now this is not always easy, okay? A lot of people talk about this, but this doesn't happen on every deal. You have to find the perfect deal. I make offers all of the time, guys. I usually make like 100 offers just before having one accepted. So this is not something that happens all of the time, but it is something that can happen. You have to make offers on a bunch of properties in order to actually get a good one. People have been talking about this crash for like 2 years, and yet prices have only go up in this period of time. So what would have happened if you bought the property when people start talking about the crash? Because like 2 years ago, we were already very overextended. Like the market had been going up since like 2008. We had that flash crash back in 2010, but that was very fast, so it didn't actually affect the real estate. It only affected stocks. But like real estate, it only crashed like in 2008. So like 2 years ago, we were already very overextended without a crash. So a lot of people were talking about a possible crash. So let's say that you didn't listen to those people back then and you bought a property 2 years ago. You would probably be safe in case there's a crash right now. You got rent during all of those times, the property went up in value, and you even got like tax breaks just for owning real estate. So I'm sure that if there is a crash, you're probably built like a safety net that a crash won't affect you because you bought property 2 years ago. So when you think like this, imagine if there's a crash in 2 years from now. If you buy properties right now, they are going to go up in value, you are going to get rent, you're going to get tax advantages during those 2 years. Even though there's a lot of people talking about a crash in 2021, there's also people talking about a crash in 2022. There's also people talking about a crash in 2023. It's really hard to time a crash, okay? Even Michael Burry, when he timed the '08 crash, you guys probably know him, he was one of the people to actually spot the mortgage bubble that was building in the US. And he actually shorted the US mortgage market. But here's the thing, he didn't really time it, okay? He just noticed that there was a bubble, because it was, and he decided to short. Had the real estate market taken like 1 year more to actually crash, he would have lost all of his money because he was paying hefty premiums to hold his short. He didn't know how long it would be for the crash to actually happen. He just knew there's probably going to be a crash because the market is overvalued and there's a bubble. Like there's a lot of subprime mortgages, so there will be something that will pop this bubble, so it will go down in the future. But he wasn't sure when. He probably assumed that it was sooner than later, but still this is something that is very, very hard to actually time. And think about it, this is a person that was sitting at an office looking at reports, looking at mortgages, looking at all of the bonds, see how they're built, the financial statements of the banks, what they are investing in. Are you doing that? Probably not. So even if Michael Burry couldn't really time it on point, what makes you think that you can? See, even though there's a lot of people talking about 2021 crash, there's no rule that the market is going to crash. Like, we don't know for sure that the market is going to crash this year. It can crash next year. It can never crash. It can happen. It probably will crash, but we have no real way of knowing when. So if we don't know when, we can't time it. And here's another old quote that has been proven true over the years. Time in the market is way better than timing the market. And the reason is again the same. It's really hard to time a crash. For example, let's take the Corona stock market crash. There were a lot of people that when they saw that the market was under 30%, like me, they bought. But there were people that told, I'm going to wait. I think that is going to go lower. And then the market started going up. And those people were like, I'm probably going to wait because it's probably going to go lower. They didn't get in, right? And then the market started recouping half of its value. And those people were like, nah, now it's too high. It has to go down for me to buy. Now the S&P 500 is trading higher than what it was before the crash. And those people never got in because they were trying to time the market. It will be almost impossible for you to buy the absolute bottom. So just do the time in the market instead of timing the market. Now your claim can be, well, but we're trading at all-time highs. The real estate has never been this expensive. Is it really good to buy what's a possible peak? And again, we came to the same thing. This can be the peak, but it can also not be the peak. We do believe that it's going to go down, but we don't know exactly when. It can double in price before it goes down. We have been proven that over and over again. For example, Bitcoin, I actually sold most of my Bitcoin. I have a little bit, very small amount, like $1,000 or something. Actually 2,000 now that it's doubled in price. I sold my Bitcoin when it was trading at $12.3 thousand. Have you seen its price? It's like a 30. I don't even want to watch. Because I was trying to time the peak. That was a very dumb thing. And I never got in again. Because I was like, oh, now it's too high. Now it's too high. And now it's too high. But if I had not if I had not tried to time it, I would have made so much money, guys. So much money. So real estate is the same thing. But real estate is better because you can get a good deal even though we're at the peak. That's the thing. You can negotiate the price. You can get super cheap property. The property that I'm currently looking at will be around 12.5 thousand euros. Even for my city, that's very inexpensive, but this is a ruin. Okay, we have to break it down with a wrecking ball and build it again. So the rework will be around 20,000, which will bring the total spend to 35,000, something like that. I'm sure that property will be worth more than 35k, even if the market crashes. because it's a good property. It's in the historical center of the city, so it has a good location. It has a lot of people that want to rent in that place. I'm set. Even if the market does crash, like I can't buy it for any lower than 12.5k, right? And even if you are in a big city, it's actually even better for you because you have way more houses in the market. We have like 10, you have probably 100, 200 houses in the market. You have way better likelihood of actually getting a good deal because you can make a bunch of offers. So go out, make a bunch of offers, understand how much a property is worth for you. If a property is worth 100, even if it's trading at 300, if it's only worth 100, then offer 100. I'm not telling you that you will buy that property, but if you don't make offers because you're scared that this might be the peak, you're never going to buy a property. Even if it crashes, guys. Did you notice how long the Corona crash lasted on the stock market? It was a couple of months. Okay? Are you really going to time it perfectly and get the property within like a couple of months? Because there is a likelihood that the market will recoup very, very fast. Okay? We don't have a bunch of subprime loans anymore. Okay? We have a lot of regulations in place, so that doesn't happen. Like our market, even though overextended, it's way healthier than what it was in 2008, right? In 2008. So it's healthier, which means that it will correct faster, okay? Because even though it's overextended, people still want to get in. And nowadays you have more and more investors because of YouTube, because of Facebook. We have a lot of platforms where people learn. So guess what? If the market crashes, a lot of investors will buy ASAP. So the market will correct itself higher, once again, very, very fast. So it will be extremely hard for you to time this. I would focus like I am. If I was you, I would do exactly what I'm doing, which is try and get a good deal on this level. And here's another thing on the property that I'm actually trying to acquire. I have the possibility that if the market doesn't crash until the work is completely done, of making a rent to buy deal. Now, a rent to buy deal is just a type of rental where the person who is renting makes an option to buy the property. It's an option. If you trade stocks, you probably know what an option is. It works exactly the same. So the person is renting the place, but they have to make a down payment and they pay a premium on their rent to actually lock in, and they have like, let's say, 18 months to close on the property. So that means that I lock the property price at the current highs. So if it doesn't crash, I have that opportunity. If it does crash, then I don't do that because I don't want to lock in the price of the property at a low, right? I just rent it. I want a rental, so I just rent it. But if it's a high, then I have the opportunity to make a rent to buy deal, rent to own, whatever you want to call it. That means that I can lock in the price of the sell at the current highs. So if the market does go down, then the buyer will tell me, hey, I don't want to buy because, the market has crashed. So I don't think that this is the number anymore. So I don't want to buy. Fine by me. That person paid me extra rent, a premium to actually have the option. And they paid a down payment that they lose. Okay, that's how the deal usually works. They lose the down payment on the property. So as you can see, guys, when you play with all of the cards that real estate has, not buying is not the best choice. Sitting on cash is not the best choice. Again, this is my personal opinion, okay? If your opinion is that you have to sit on cash because the market is going to drop 90% tomorrow, do that. But I've looked at this in many angles, and to me, it just doesn't sound right not to buy, right? Because I can get a good deal. I can lock in the sell price if I do a rent to own. I can do a lot of different things to make my money's worth and not have my money sitting at a bank, losing money to inflation. And this is actually the best tip of the video, is the rent to buy to lock in the sell price. If you stay this long, you got a golden gem here at the end. So make sure you drop a thumbs up, and I'll see you guys in the next one. Peace.